Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So we're just going to talk about velocity banking again. Recently I got a comment on this channel like, "What bank lets you freely borrow money in a form of a line of credit?" And I was, I want to respond like pretty much all of them, right? And you'll find a lot of credit products out there that aren't necessarily marketed to the general population because they're not as profitable to the banks compared to credit cards, right? There's a reason why credit cards are heavily pushed towards the general population. Okay. But there are lines, credit products out there that most people aren't aware of, and one of them is a home equity line of credit. So, a home equity line of credit, that's like one of our main tools to do something called velocity banking. You could always use a personal line of credit. In some instances, you can combine credit cards and personal home equity lines of credit. And you could pretty much find this in any bank or credit union. In fact, the US has only, not only, over 4,000 banks in the nation, over 4,000. And so if you take a look at a place like Canada, which is kind of like my obsession nowadays because I'm fascinated how how Canada is because there's so many videos on Canada nowadays. Canada only has about 6 banks. In fact, remember the president talking about like the US can't do banking in Canada? You ever hear that? I wonder if how true that is. But Canada only has 6 banks and the US has over 4,000. And so, if you tell me like you can't find any banks in that will give you a line of credit, well, I won't say give, but that offers a line of credit, I'll be like, did you go through all 4,000 of them? Right. So here we are at Bank of America's website for regarding their home equity line of credit. Right. So, what is a home equity line of credit or just a line of credit in general? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. So think of it as like a giant credit card. This is my home equity line of credit. So basically, what you do is you offer your home equity. All that means is the value of your home minus any loans that you have, and then they'll offer it as collateral, or you offer it as collateral, and then they'll essentially give you a credit card like financial device so that you can borrow it, pay it back, and use it over and over again, right? Isn't it awesome? And you can use it to pay anything. It's my home equity line of credit, $280,000, 280, and I got $579,000 in total. And we're going to use it to use this to do this thing called velocity banking. Velocity banking. Why can I not speak? Oh, probably because I didn't go to sleep. I didn't sleep too well, but it's okay. We'll just do another velocity banking review before the end of the day today or for this video. So, what is velocity banking? All it is a debt payoff strategy where you throw all your money into debt with the help of a line of credit. And here's the thing about getting a line of credit: if you're ever in a situation where you only got one penny left over in savings, the bank's never going to lend you, or they're not going to give you a line of credit because banks don't lend money to people who need it. So if you ever go to a situation or go to a bank or in a situation where you need money, they'll laugh you out the door. Right? They'll laugh you out the door. So this is what we're gonna do. We're gonna assume we have a free and clear line of credit, $200,000, but realistically, they won't lend it to you. And so this is kind of like a warning sign about how a line of credit could help you if you just don't screw up and wait until the last minute to get the money when you need it, right? But let's just assume that we had a $200,000 line of credit. And then what we're going to do is we're going to have an idea called cash flow and throw some debt into the line of credit because we're assuming the balance is zero right now. And what we're going to do is move these 10 credit cards, right? 10 credit cards, and then they will all go to zero. Okay. So how much credit card debt do we have? Let me just calculate. So 5, 8, 15, 27, 30. I'm just writing down the balances: 10, 35, 12, 18. And then I'm going to do this. So it's $167,000 in credit card debt, $167,000. So let's go ahead and move that here. And then guess what happens with these 10 credit cards, all the payments, because it's like doing a balance transfer almost, but not really. All the 10 credit cards go to zero, right? So you see that. And then the final step is you're going to put your entire paycheck into the line of credit, take your expenses out, and after every single month, the balance will go down by $5,000 and some change, right? So here we started off with just a penny in savings. Here we didn't save money, right? We didn't save money, but our balance went down by $5,000. If you take a look here, okay, take a look here. I practice what I preach. I don't have any money in my savings account. Zero, zilch, wablam. I don't even know what that even means. But yes. All right. So now let's go here and show how this works in action with some approximations in math. So I'm just going to do this, EG2 plus H2 minus, what's our cash flow? Our cash flow is 5345.84. And then what we're going to do is take the average daily balance, right? Average. That's going to be used to calculate the interest, 0.08, and then divide by 12. Well, blam. All right. So I'm going to copy and paste and then paycheck in, expenses out, and look how easy that is. Oh my goodness. So in 35 months, take a look at this. We paid off $167,000 of credit card debt. We ain't struggling anymore. Thank goodness I had the home equity line of credit, right? And so now this is what we're going to do. We're going to write our milestone, which is 35 months, and $167,000 of credit card debt. Okay, so we're going to do that. All right. And then now we got the auto loan, student loan, and the mortgage. So let's take a look at our loan calculator. We just type in 35, 35, 35. And then this has the current balance. I'm going to move this balance into the line of credit because not only is it the lowest balance, but it gives me a significant amount of cash flow. So I'm going to do that. This is the auto loan, 11 grand. So let's go ahead and do that right here. So we're going to move this 11 grand into the line of credit. So plus 11024.64. All right, so now this is what we're going to do. This is zero, right? And $5,806 in our cash flow now. And let's go ahead here, and then I'm going to copy and paste, right? Copy and paste. And then I'm going to do this. And then now our cash flow is 5806.14, right? 0.14. And then I'm going to copy and paste. And now, whoa, 2 months and our auto loan is paid off. That's amazing. So let's go ahead and do that and write this down. So 37 months. And then it's 167 plus 25. It's 192K. All right. So I'm going to do this. And then here is the student loan and the mortgage. So we got to figure out what the balance is. And this is so easy. Oh my goodness. I have this mastered to kind of like, I don't want to say a science, but it's more like I'm on autopilot with this. Like I don't even have to think about this. And so what's next? Well, basically, this is zero, and I'm basically going to pay the student loan first, right? Because it has this lower thing called the cash flow index, and basically, I'm going to get more bang for my buck, paying it off to 75 grand to get the $1,000 of cash flow or $1,100 of cash flow versus a 326, which will give me the 1,400 in cash flow. Okay. So, in order for us to pay off the loans, we're going to use something called the chunking method. So, what does that mean? Basically, instead of moving this entire 75 grand into the line of credit, we could just pay it off in small pieces. So, what's our income right now? We'll just use like $11,000 pieces, right? So we just take away $11,000 and then we rinse and repeat and do the paycheck and expenses out. In fact, if I just do this right here, let me do this right here. If I move $11,000 plus 11000, how long does it take to pay off that 11,000? 2 months, right? And then we just rinse and repeat over and over again. So luckily we have this velocity banking calculator right here where all I got to do is just type in the numbers and the deets and 11000. That will be what we call our chunk amount. And what's our current income? Our current income is 10891.96. 10891.96. Oh my goodness. Like, I can't believe it. So let's go ahead and hold on. This is going to be 3975.61. So 3975.61. So this is a 10, was it a 10-year loan? What's the payment amount? It is 6% at 1110.21. So 1110.21. And then this is 6%. And what's the original balance? The original balance is $100,000, 100000. And then the current balance is 75,266.69. 75,266.69. And then here we see that it pays off in 1 year. Amazing. All right. So let's go ahead and do that. So it's 37 plus 12, which is 49 months, right? 49 months, and then 292K paid off. Wablam. I think I am good. And then at 49 months, we figure out what the balance of the loan is, and we just keep going and going like the Energizer Bunny. All right, so now this, we'll just do this one more time. So I think this, what's the 1475.61? So 1475.61, and this is 330, and then I think it's a $350,000 loan. 318,732.91. 318,732.91. All right, so how much is the living expenses? It's everything except for the loan we're trying to pay off. So it's 2,500, and then time to do that, and then wablam, 3.4 years. That's it. All right. So 49 divided by 12 plus 3.4, which is 7.4 years, completely debt free. Woohoo! All right. How much debt was that? It's 160. It's 292. It's 292 plus 350. So that's 642K in about 7.4 years. Not bad. And so this should all go to 0, and then what's our cash flow now? $8,391.96. Now, why do we use a home equity line of credit? Because the home equity line of credit will give you the biggest credit limit and has the lowest interest rate out of line of credit products, right? So that's why we like home equity lines of credit, but you can use personal lines of credit. I get like two $15,000 personal lines of credit that I barely use because using my home equity line of credit as my main operating account. And you might get one too if you own a home, but you don't need a home because you could use a personal line of credit at a 15% interest rate. Okay. All right. Well, that's it for today, folks. This is Korean Atlanta Mentorship. Have a great day, and I'll see you all in the next video.